We're talking all things to do with Ethereum, one of the most popular coins besides Bitcoin. Joining me today to discuss this is Brian Norton, COO of MyEtherWallet, about an interview that you did recently in which you said that you're doubling down on Ethereum this year. Can you elaborate on what that means and why?
I think that we're just seeing the beginning of Ethereum's growth. With the launch of the Beacon chain in December, which is the first move towards Ethereum's move to a proof of stake network, we've seen incredible interest in people putting down Ethereum 32 ETH in order to stake on the Ethereum Beacon chain. That shows an incredible amount of investor confidence in the long-term viability of the Ethereum blockchain. And because of the fact that overwhelmingly the developer community is behind Ethereum, the DeFi activity is on Ethereum, that we're only just beginning to see the start of long-term growth for this ecosystem.
Okay. Brian, as somebody who is probably interested in buying Ethereum or wants to invest in Ethereum, the way I look at it, and please correct me if I'm wrong, is that Ethereum is sort of an asset that has leverage to Bitcoin. So if Bitcoin goes up by 1%, Ethereum might go up by 2 to 3%. If it goes down by 1%, vice versa. So it has a higher beta. It's a higher beta instrument to Bitcoin. So if I'm bullish on Bitcoin and cryptocurrencies as a whole asset class, then I should be buying Ethereum as a leveraged play. Is that the correct way to look at this, you think?
I think that's one way of looking at it. I tend to steer away from looking at the assets as entirely tied. Overall market sentiment, that might show historically what overall market sentiment has been over the last year and a half. I think that when you get down to fundamentals, Bitcoin is a deflationary currency. That's what it's designed to do. Ethereum is a value-generating currency, and so at some point, the valuation, the value being generated on Ethereum is going to break out from Bitcoin, and it's going to move in. It's going to move independently. That isn't to say that there's not always going to be a correlation between the two. I can see that happening for a long time to come. But when evaluating Ethereum's long-term prospects, I think that people who are interested really need to look at the value being generated on the Ethereum blockchain through these other applications.
One of the things I've read about Ethereum and concerns that investors have is that Ethereum's supply is technically unlimited or infinite. And so that might be a worrisome value proposition as something that has unlimited supply theoretically should go down in value. First of all, is that a myth that it has infinite supply? And second, do you agree with that proposition?
So it is a myth. I think the term infinite supply is misleading. Like I said, it works on a minimal viable issuance, meaning that yes, it will continue to issue Ethereum tokens will still be issued as long as the Ethereum blockchain exists and is up and running. But its issuance will gradually decrease over the course of time. It will only issue enough to incentivize validators to continue to secure the network. So that ensures the long-term viability of Ethereum. So Ethereum's scarcity is actually driven by its use rather than its issuance. So what will drive the price up, which will drive demand up, is actual value creation on the network. The more things that are built on Ethereum, the more demand there will be for the supply of Ethereum, and as issuance drops over time, that the value of Ethereum as a token should increase. Obviously, it depends on our ability to continue viable development and to increase activity on the network.
So there is a theoretical cap, is what you're saying, to the supply.
Theoretically, there could be.
Okay, well, it's not a definite cap. It sounds like so. Maybe the demand supply fundamentals are different for Ethereum than for Bitcoin, right? Can you describe in layman terms the differences in the fundamentals?
Of course. So I think I touched on it a little bit. So value creation on Ethereum drives demand. So you need Ethereum to process any transaction on the Ethereum blockchain. That's what drives demand. Bitcoin doesn't have any inherent utility. So it requires that supply cap in order to retain its value. Without that, there's nothing inherent to Bitcoin that drives its demand. What drives demand on Ethereum is actual usage of the network for the building and executing transactions on these other applications.
Okay. So what technological innovations do you see being built on Ethereum going into the future? I think a few years ago, there was talk of a world computer being built on Ethereum and perhaps a new internet. That kind of fizzled out. First of all, what happened to that?
I think that, I don't think it's gone away, but I do think that at this stage in our development, we understand that we're definitely a ways out. But I think that what we're seeing now is a lot of innovations in terms of cross-chain composability. There's a lot of, alongside Ethereum, there's also Ethereum-based chains and side chains to do all sorts of introduce augmented functionality and increasing transaction throughput so things move faster, cheaper with lower fees than on the Ethereum main chain. And so I think that what we're going to see is use cases popping up alongside other chains that are compatible with the Ethereum main chain that will allow new use cases to be introduced over the course of the next year. So I don't think that the world computer idea is entirely dead, but it's evolving to evolve